Palantir stock is the main subject of today's video. A lot of news was released in regards to Palantir today that got a lot of people very confused, very frustrated. Alex Karp selling shares, we'll speak about that. Dilution of shareholder value, we'll speak about that. And I dove into all this because I saw a lot of chatter on X. I saw a lot of chatter just other places about what happened here. And so I looked into it and I want to describe what's going on here and kind of explain that to you guys, because I think it's a very important subject, especially with a lot of people who are getting really frustrated. Palantir stock was selling off huge at one point here today. It did bounce back quite a bit before the close, though, okay? So we'll speak about that at the top of this video, the pros and the cons, all sorts of things, okay? Then we're going to get into Walmart's shocking earnings, which Walmart's earnings were shocking. We're going to get into Home Depot's horrible trash earnings. We'll get into that. Toll Brother earnings we'll talk about. And then at the end of this video, we're going to get into a shocking situation that could happen in the NVIDIA report tomorrow that I need to speak about. And by the way, in regards to the NVIDIA report tomorrow, I will be live on Twitch for those numbers tomorrow. It's pinned comment down there to join me. Put it in your phone, put it on your head, put it on a note, put it in your bathroom, okay? I'm going to be live on Twitch tomorrow. You don't want to miss that. This is a Super Bowl for the stock market, okay? Tomorrow. NVIDIA's reporting after the bell, so that's obviously big dog. But then also Cheesecake Factory's reporting, Rivian's reporting, Luce's reporting, Etsy. It's going to be a fun live stream tomorrow, folks. All I ask in return here today, smash a like, make sure you subscribe to the channel, folks. That's it. Smash a like, make sure you're subscribed. Let's get into this, okay? Now, before I get into those subjects, there's two quick subjects I got to touch on because they're just too big to just ignore. Amazon. It just came out after, probably in the last hour. Amazon will be joining the Dow 30. Now, this is a huge thing because the Dow 30 usually doesn't shift. It's not like the S&P 500 where stocks are coming in and out all the time. When in the Dow 30, usually when a stock gets in, it's in for a long time, usually years or decades, okay? And so the fact that Amazon is now joining the Dow 30 means Amazon stock's probably going to be part of the Dow for the next, I would say, 20, 30, 40 years, just to be honest, if not longer than that. It's going to be a long time that baby will be in there. Now, you might be asking yourself, okay, so it's entering the Dow 30. It's a huge deal because these stocks hardly ever shift in and out. Well, what does that mean for the stock price of Amazon? Here's what it means. I think it means Amazon could go up a little bit in the short term, but I mean a very little bit. This is not nearly as big as the S&P 500 from a stock price movement perspective. Getting in the Dow, you got to understand, like, in regards to the S&P 500, the thing that makes the S&P 500 so big and why everybody cares about it so much and why people even want to try to front run stocks, even a Palantir, right? A lot of rumors about Palantir's getting in the S&P 500 this year. People are trying to front run that, right? Why do they like to do that? A reason being is the S&P 500 is a huge index that people just blindly invest into. What does everybody say? Buy an S&P 500 index fund, right? And so money is forced into stocks. The Dow 30, some people buy the Dow 30, straight up, or they buy an ETF that is of the Dow 30 and things like that, but it's not even remotely close to as popular. The Dow 30 gets talked about a lot from a perspective of, like mainstream media, but from a perspective of money funneling in and like, well, there's going to be an influx of money, doesn't make that much of a dent. So it could be a little help short term, but it's not nearly as impactful as the S&P 500. When a stock gets into the S&P 500, many times you can see that stock price move 5, 10, 15, 20% quickly. From the time it's basically announced to the time it gets in the S&P 500. In Amazon's case, do I see Amazon going up 10, 20% here in the very short term? No. So, when I say help, maybe it helps a few percentage or something like that, but very small compared to the S&P 500. Another thing I got to touch on here is Palo Alto Networks stock, which is one of the best stocks of the last 10, 20 years in the market. It's getting obliterated after hours. The stock price is down about 20%. No bueno situation. So the company's guiding for full year total billings between $10.1 billion and $10.2 billion as compared to their previous guidance at $10.7 and $10.8 billion. So it's a huge miss there. And you can't come in and miss in this market. I mean, a lot of companies have been reporting really good numbers. And so for Palo Alto to come in and report a guide that's way under what analysts are expecting here for cybersecurity, something that's, very needed. That's, how a lot of people look at Palo Alto. It's just, you can't do that, man. You can't come in with those sorts of numbers. So, very disappointing in regards to Palo Alto Networks, and that could hurt the NASDAQ stocks tomorrow, could hurt tech stocks in general. It's just something to kind of keep in mind there. I mean, a Palo Alto Networks being down 20% is a big deal, guys. It's a big deal, okay? All right, let's get into Palantir and what's going on here, and then we'll touch these other subjects, okay? So, 3 things were released on Palantir's investor relations page today, okay? And we'll touch on all 3 of these things and a few big things that happen. One is this report of proposed sale of securities, the other is securities registration employee benefit plan, and then annual report, okay? The first one up here, Alexander Karp. It looks like 650,000 shares are going to be sold. That's going to be proceeds of about, we can call it almost $16 million, but $15.8 million. And approximate date of sale was today, okay? Now, the thing you understand, there's a few things to understand in regards to a CEO selling stock, like Alex Karp. First thing is, this is a very small portion of his amount of shares, right? Extremely small portion. Next thing to understand is a lot of these moves have to do with options. If you don't know, executives of companies, CEOs, CFOs, many others, they get basically compensation in options, and then they exercise those options over time, and then they end up moving out of the underlying shares in relation to those options. So that's a factor to keep in mind. There could be tax bills due this time of year. That's another factor that is at play here in regards to somebody like Karp. The other thing to keep in mind here is just because the CEO is selling stock does not mean the stock price is doomed or it's going down. Zuckerberg's been selling Meta stock for 10, 15 years now. It's been a long time. Zuck sells stock more and more and more. And look at Meta stock. It's performed absolutely amazing, right? Speaking about amazing's on. Jeff Bezos selling Amazon stock all the time. And that stock's done just fine over time. Steve Jobs famously sold Apple stock many times, and yet it became the biggest company in the world, right? And so you got to understand, like, just because a CEO sells a portion of their shares does not mean that company's doomed or something like that, right? But I understand people get frustrated, and I think they get more frustrated when it's on a down day. You hear news like this. The stock was getting hit hard today. I think at the lows, Palantir was down 7 or 8% today. It only finished down 4%, but it was down 7, 8%. A lot of people get really, really frustrated, right? And, on the February 7th, he had sold 975,000 shares, which was equivalent to about $22 million there, right? So this is something that makes me, if Alex Karp was buying the stock today, I'd be like, great. Am I going to go out there and buy extra Palantir shares because Alex Karp's buying them today? No. So the same thing goes for when they sell some of their portion of shares. And once again, this is like minuscule money. Karp's got billions of dollars worth of this stock. And so, this, just keep in mind, this is like Coca-Cola, buying a bottle of Coca-Cola from a vending machine, okay? For him, at least. Next up here, this is a Form S8 here. And this was another thing that was released by them. And so this was one that caused a lot of confusion. People thought Palantir is just diluting shareholder value to be diluting shareholder value. And so I looked a little bit more into it, and this is what I found. The registration statement on Form S8 registers additional shares of Class A common stock of Palantir Technologies available for issuance under the 2020 Equity Incentive Plan, the 2020 plan. The number of shares of the registrant's Class A common stock available for issuance under the 2020 plan is subject to an annual increase on the first day of each fiscal year starting on January 1st, 2022, by an amount equal to or at least of 250,000 shares, 5% of the outstanding shares of the registrant's common stock as of the last day of the immediately preceding fiscal year, a lesser amount of shares determined by the 2020 plan administrator. The registration statement registers an aggregate of 110 million shares of the registrant's Class A common stock, all of which will be available for issuance under the 2020 plan as of January 1st, 2024, right? So, to break it down as simple as possible, this is a plan that's been in place for many years now at this point in time, right? And you understand that for a company like Palantir, they're going to pay, like, why, if you're a high-level person, why are you going to go to work for Palantir? It's not just because you believe Palantir is a great company and you want to do great work for them and work for Alex Karp and all these things. No. It's also because you're going to get a salary. But it's not just a salary. It's then the stock options on top of that. And in regards to those stock options you get, or those shares you get that vest over a portion of time, right? Well, if the company does very well while you work there and those shares are vesting that you're getting given in compensation, right? Suddenly you can go from you make $200,000 a year, it looks like, but really you're making $400,000, $500,000, $600,000 in reality, okay? And so this, all tech companies do this. Google does it, Apple does. I can't think of a tech company that doesn't dilute shareholder value by issuing shares over time and giving those shares to their employees, and especially their top employees over time. So this is what's going on there. And I look at it, when I look at it, it's like, it's part of doing business, right? It's part of doing business. Like, there's no way around it. It's like saying, like, I wish Palantir didn't have to pay their employees. Like, okay, like, it's part of doing business, especially as a tech company. Now, in relation to Palantir, they've been keeping their shares outstanding under I would say, pretty good check here recently, right? As far as in 2022, shares outstanding went up 3.89%. 2023, shares outstanding went up 3.4%. That's very good. I mean, if Palantir can keep, around those sorts of numbers, that's great. Because it used to be a big subject for the bears about, Palantir's got crazy share dilution because they had 94% in 2020. They had 14% in 2021. So that was the big subject. Like, oh my gosh, they're diluting shareholder value. It hasn't been the issue the last couple of years. And I don't really see it being the issue here in the short term either. I think, from what I see, they're going to still be able to keep their shares outstanding in pretty good control here, right? Now, on top of that, and by the way, they also have a share buyback on right now, right? Which you got to understand why a lot of these big tech companies do these big share buybacks. One is it helps their earnings per share. You take shares off the market if your net income is just flat, and you take a bunch of shares off your market, your EPS expands rapidly, right? Never mind if your net income can go up while you're taking shares off the market because you're buying those shares back and expiring those shares, right? Then your EPS flies to the moon. But it's also so you don't have a situation where your shareholder value is consistently being diluted. So that's why they do these share buybacks. And I think that's why Palantir has that big buyback in place as well. I think it's to kind of mitigate the employee compensation situation, right? Now, in regards to their 10K, there was a few important things I thought here, okay? Right off the bat, there's a company, whenever you look at a 10K, right, there's a bunch of kind of BS legal jargon there. And then the 10K really starts in the overview section. And it was fascinating to me because Palantir, in the first couple sentences of the overview area, mentioned AIP twice, which shows you, for a company to put this in their 10K at the very beginning and mention it twice, shows the importance that AIP has at this point in time. And it's amazing how much influence this has really, gotten in such a quick amount of time for Palantir, right? Now, also, I did notice this as well. When they list off their products and they go into detail, they list Gotham first, which makes sense. Then they list Foundry, which makes sense. And then they list AIP. They list it above Apollo now at this point in time, which shows you, in my opinion, once again, none of these things are done in accident, in my opinion. Mentioning AIP several times at the beginning, I don't think that's done in accident. Putting AIP above Apollo, I don't think that's on accident. I believe that shows like where Palantir's, future's at here and what's going on and, how important they view AIP. I think they view AIP as important as Foundry or Gotham for this company over the coming years. That's just, me reading through the tea tree leaves in regards to this, right? Now, this is pretty substantial. I mean, really substantial. So, there was a change in word choice in the 10K. The language has changed, and they posted this in the private stock group's Palantir chat here. The language has changed from may or may not to will at some point in regards to the $1 billion share repurchase, right? Now, that's an important change in word choice there, right? From may or may not to will, that means like we're doing this. And the question is, what price are they going to buy back Palantir shares at? Well, I mean, if the market went big risk off for a bit, let's say NVIDIA numbers don't hit. Let's say NVIDIA numbers come in, I don't know, the guidance is weak or whatever, and the market goes risk off for the next, weeks or months, then maybe they could get Palantir back under 20. But my view is that outside of a big, massive sell-off in the market where all these risk-on stocks get hit heavy, I think they're going to have to buy something in the 20s. I just don't see any way around it outside of the whole market just really getting a downtrend. So, if anything, Palantir should probably root for, in the short term, a big weakness in the market. So then hopefully the stock can pull down a little bit and they can maybe get shares at 18, 19, something like that in terms of buyback. But it looks to me like they're going to have to buy in the 20s. That's what it looks like to me at the end of the day, okay? Now, for Palantir, let's not confuse the story, okay? For Palantir, it's all about scaling this net income, right? They went from September 2022, $123 million net loss, to this latest quarter they had a $93 million net income, right? This is a story all about scaling that net income. If this company continues to scale this net income massively over the coming years, like, they're going to be able to buy back so many shares. It's just going to be ridiculous. If they can scale this net income up to starting to make $1 billion a year in net income, several $1 billion a year in net income, like, oh my gosh, like all this share dilution, those sorts of things, and employee compensation, it all becomes irrelevant as long as no one ever talks about Google, Meta, Apple, Nvidia, any of these companies for share dilution. They don't. Why don't they? Well, because those companies all produce such insane net incomes that then they have so much money, so much cash flow coming into them all the time, they're able to then go ahead and do share buybacks again and again and again and mitigate any share dilution that's happening out there. So as long as Palantir continues to focus on their business and growing that top line, that bottom line substantially, like, this all ends up not even mattering in the end in relation to that. So I just think that's a little food for thought in regards to this situation, okay? So that's the big, huge situations in regards to Palantir broken down for you there, okay? I hope you enjoyed that portion there of me breaking down all three of those subjects for you, okay? Next up here, let's talk about Walmart's shocking earnings. Then we'll get into Home Depot's trash earnings, Toll Brothers' crazy earnings, and then what's going to happen here with Nvidia, in my opinion, okay? So first off, in relation to Walmart, their income statement was a B+. It could have been an A+, but they had a one-off expense here. It was a big one-off expense. See, other gains and losses. It was like a $3.8 billion kind of one-off there that hurt their numbers, but it's still a really good quarter overall for the company. But the shocking number for me was right here. Operating income for Walmart was up over 30% year over year. I can't even believe it. I'm like, what? 30% plus operating income up for Walmart? Like, Walmart is one of those companies you usually expect operating income to be up 3 to maybe 9%. Somewhere in there, 3 to 9%. The fact that it was up 30% plus, I was shocked, man. I couldn't believe it. I was like, you better be flipping my flapjacks. How about that? Now, in regards to Walmart, I got to say, they've fixed their problems, at least in the short term here, and they've got a lot of growth going for that company. This was a dog stock. From 2008 to 2018, it was a dog stock. It went basically almost nowhere for that entire decade. It's just like, it was just in a horrible place, and no one wanted to own the stock. And I mean, the chart's pretty self-explanatory. Since 2019, the stock's been in a very good place, and respect, man. I'm shocked. That's all I can say, shocked. Now, Home Depot, on the other hand, Home Depot, bad. Net sales for Home Depot down 2.9%. Cost of sales down 2.6%. So cost of sales didn't even go down as much as net sales did. So that's always bad news, because that means your gross profit is going to be down even more than your revenue was down, right? Gross profit was down 3.5% for the company. Selling general administrative was up 2%. Depreciation and amortization was up. So if those are up, your operating expenses are going to be up, right? And those are up 2.7%. Operating income down 12.8% for the, Home Depot, operating income down double-digit percentage? No bueno. Interest income was up quite a bit, but this company has a ton of debt, so the interest expense was up, a lot more on a number basis than certainly interest income, which means your net earnings is going to get destroyed. Net earnings was down 16.7% for the company on a year-over-year basis, and diluted EPS was down 14.5%. So overall, in relation to Home Depot, no bueno. I believe, and here's the thing, okay, in regards to Home Depot, there's no opportunity here. There's no like, let me buy this stock, because here's the thing, let's say Home Depot's numbers improve over the next year, the next 12 to 18 months or something like that, because of where the valuation's at. Keep in mind, Home Depot should trade at a forward PE of, 15, maybe 17. And so the forward PE is way ahead of that, which means they're already pricing in kind of a bounce back in the business. And the way I look at a Home Depot, I think this is likely going to be a lost decade for Home Depot. I think like 2021 through 2031 will end up being kind of a lost decade for the stock overall, in my personal opinion. I think there's going to be a big recession at some point in time. There's no doubt about that, right? It'll be a big unemployment-related recession. At least somewhat similar vibes to GFC. I'm not sure if it'll be, as bad as that or worse than that, or I don't know. But it's going to be a pretty heavy one. And whether that hits in 25 or 26 or 27, I think it's, there's no predicting exactly when it's going to hit, but it will hit. And so when we have that, the Home Depot stock is probably going to fall in the 150 to 200 range in that particular recession, right? And then after we start coming out of that recession, which that will be a tough one to dig out of because that will be an unemployment-related recession, which those takes quite some time to kind of get back going in the right direction because you have dominoes falling for quite some time. So by the time the stock starts to get momentum again, you're talking about years down the road. So imagine, stock is $150, let's say in 2026. We had the big crash. Then it's got to climb back from that. And then it's got to get back to 400 plus. Well, it's going to take years to get back to 400 plus for the company at that point in time, which then puts you out. So I think there's a decent probability that stock could be in a lost decade right now. And in the short term, maybe it could go back to 400 plus, before the next situation happens. But that is what that is, right? Toll Brothers, on the other hand, the business is booming for them, man. There's a grade A income statement. It's phenomenal. I mean, what's there to not like here? Home sales up a ton for the company, revenue up a ton for the company, 1.78 billion to 1.94 billion. Home sale cost of revenues down to 72.4% from 74.4%. That's great. Land sales and other 63.5% from 138%. That was a troubling number in the same quarter last year. That's good. Gross margin 27.6% versus 25.6%. That's 200 basis points of improvement there. It's phenomenal. Gross margin on land and other sales 36.5 from a negative 38 in the same quarter last year. Selling general administrative expenses up 11.9, it was up quite a bit year over year, but it did fall a little bit as a percentage of revenue overall. So income from operations exploded to $308 million. Like, these are all record numbers for Tolly Moly in this sort of quarter, right? $239 million in net income, $2.25 diluted EPS, phenomenal. Business is booming for them. And, a huge component of why business has been booming for them is what I spoke about in yesterday's video. If you watch my PayPal stock, all-time low sentiment, I spoke about 3 subjects in that, and one of those was we talked about real estate in that video, right? After we got through PayPal stock. And I showed you the chart of his existing home sales. I mean, the numbers are horrible. And in terms of inventory on the market, it's still extremely low. And so for a company like Toll Brothers, they continue to kind of be in a sweet spot because these home builders can buy down rates here in the short term. They're not competing against a bunch of existing inventory out there. And so these guys continue to just be in a sweet spot in the short term. This is going to end. There's no doubt about that. But once again, it gets tough to predict exactly when the music's going to stop for these sorts of companies. The music will stop. It's just like, dude, is it 2 quarters from now? Is it like 3 quarters from now? Is it like 5 quarters from now? The music will stop in relation to that eventually here, okay? Talk a little bit about NVIDIA and some of my thoughts around these NVIDIA earnings that are coming here, okay? So it was interesting. While I was preparing this video, I was sitting in this chair mainly, and I had fast money on. While I was, prepping the video, I'm just kind of, listening and whatnot. It's kind of like background music noise, we can call it. And it was fascinating because I'm listening to them talk about NVIDIA on fast money. And they were so focused on downside. And they were so focused on talking about, well, if they miss, the numbers aren't impressive, this is going to happen. There was almost non-existent talk about like the upside, which you're usually in either a bubble or, a stock's about to have a problem if all people are thinking about is upside, upside, upside. Oh my gosh. When I put on a show like that and all they're talking about is the downside potential and, oh my gosh, it can go down and this and that and, if this number is weak and decelerate, blah, blah, blah. I'm just like, I don't know if we've reached top yet because that doesn't feel very toppy when all you're considering is the downside for the stock and not the upside potential. Like, if anything, you should be talking about the upside potential of the stock considering the guidance this company's put out for the last three quarters in a row that have just been shocking, right? to not be considering that more and that not being the focal point shows me that I'm not even sure we're anywhere remotely close to a top here in regards to this stock and kind of what's going on there, right? We'll see in the numbers, but I'm just like, wow, the sentiment is still not where I would think it would be for a stock like NVIDIA, right? And the other thing I'll say is the setup's very good here for NVIDIA going into these earnings. The stock was down 4% plus here today, back under 600. It's down after hours, I think, on the back of those Palo Alto Network numbers. And so it's a pretty good setup, actually, for NVIDIA going into these numbers tomorrow. And so my thinking here is if they beat analyst expectations as far as revenue guide for next quarter by at least $2 billion, I think this stock's moving rapidly. And when I say rapidly, I'm talking about it's going to be right back over 700, and then it's going to be on its way to 1,000. So, I'm just like, I don't know. It's just fascinating for me to kind of just sit back and watch this stock, because I consistently watch people doubt it again and again and again and not learn their lesson. I've been watching people doubt NVIDIA now for a year. It goes all the way back to the first quarter of last year, and the stock made that first initial move to 150, 175, and people are like, oh, what the heck? This should not be happening. And they already started on the short train, right? And then it ran to 250, and people are like, what? No way. Then it ran to 350. Then it ran to 450, 550, 650. Then it ran to, nearly 750, and it's just like people continue to doubt the stock again and again and again. And I don't know, man. It's just a freight train that at some point, is it going to fall off the rails? Sure. But, do you want to bet that it's going to fall off the rails in the very first year of a major chip cycle? I don't know, man. Usually these big chip cycles usually have insane numbers for a minimum of the first year or two. So we may not be at the peak of this particular part of the chip cycle yet, or anywhere remotely close to it. And so it's just like, do you want to step in front of that? And then remember, the H200s is still hitting the back half of this year. So even if the guide for this upcoming quarter isn't that exciting, Jensen could potentially give full year numbers if he wants. He could potentially talk more about the back half of the year in H200 pricing and how that could be considerably higher than where H100's at, and how demand and interest in H200's overwhelming. And so there's so many factors here that I'm just like, why do people want to continue to get in front of this train? It just doesn't make sense. You get ran over again and again and again. And it's like, at some point in time, just get out of the way of the train. Either be on the sideline or stay on the train. That's all thing I'll say. I'm not looking to pick a peek at an NVIDIA top. I haven't been looking for that opportunity in the past year. I'm still not looking for that. I'm like, at some point they'll come, but it's just like, I'm not convinced it's yet. Okay. Alrighty, guys, appreciate you joining me. As always, pin comment down there. Make sure you join me for that Twitch live stream tomorrow. That's going to be insane. Okay. It's the Super Bowl for the stock market. Much love and have a great day.